Hello traders, the title of this video is the magnitude of risks. The magnitude of risks. Okay, what is the magnitude of risk? How can you assess risks and assess the magnitude of risk in order to make accurate trading decision? Okay. For those of you who are new to us, we are the TSTWS08 traders, and our website is www.stochastic-magdi.com. For all trade, we'll use the 5% money management rules and apply stop loss in all trade. This video is for educational purposes only. It is neither a solicitation nor an offer to buy or sell any financial instrument. Okay, it's not a signal to buy or a signal to sell anything. Okay, is for educational purposes only. Assessing the magnitude of risk. Okay, we are looking at the daily chart of Caterpillar. Okay, and looking at this daily chart alone, this time frame, because this is a very important issue, the time frame. And when we are talking about assessing the magnitude of risk, when you are looking at a particular time frame, okay, you see a different picture. So you assess this picture that you have here, and you make a decision according to what you have seen or what you know. Talking about what you know, we are talking about the fundamental. Going to Google Finance, checking, putting the epic of this Caterpillar, which is also a market leader. CAT, okay, Charlie Alpha, okay, Tango, that's the epic for Caterpillar. Putting Google Finance, okay, very important, excellent, beautiful Google Finance, excellent free stuff. In the past, people used to pay a lot of money for all this information. Now with the internet, okay, Yahoo Finance, Google Finance, excellent stuff. Put in check the balance sheet, check the short-term debt, compare the short-term debt to the long-term debt. You see now for the Eurozone, okay, we are talking about debt. When you are assessing the fundamental, the most important thing to check how much, okay, the company owes and how the company is capable to pay it, and how long, okay, is the company, okay, how long before the company has to pay the full debt. As you see now recently talking about the sovereign debt, it's just a simple common sense, as I told you before, that the United States went into recession, Japan went into recession, Great Britain went into recession. Using just a pure common sense, the Eurozone will go into recession. When we were saying that few months ago, when everybody was very bullish buying the euro, no one believed us, but it's just common sense. And now everybody's selling like a mad. And when it's time to buy, people will keep selling. And according to the Investor Intelligence Survey recently, and when traders are supposed to buy very often, and they will sell. And when they are supposed to sell, they will buy. And this is what's going on. And the contrarian traders are making a lot of money in this volatile, messy market. But what I say to traders is that the patient traders are smart traders. They stay calm, they wait for the music to change and everything to set nicely before they enter the trade. Talking about assessing the risk magnitude, the magnitude of risk, when you're looking at this chart now, you make a decision according to what you see and what you know. What you know, we talk about the fundamental, Google Finance. No nonsense, Google Finance, very important, okay? So you will say, okay, I see a kind of, you will say, okay, George, looking at this daily chart, this is what a lot of traders are doing, okay? They go to the daily chart, they don't want to know what's happening on the weekly chart. Say, okay, this is inverted head and shoulder. This is what George said. George said this is the inverted head and shoulder, so they buy here, okay? That's what they see on a daily chart because they made their decision on a daily chart. They don't want to know about critical price level. They don't want to know about the small median line. That's it. They are happy about it. Okay, they say George said that we have to draw a channel, okay, which is not bad. There's nothing wrong with that, okay? There's nothing wrong with that at all. So George said that, okay, this channel is rising. That's what George said. So he pulled back here. Not too bad. This bad decision, okay, on this in a support zone for this Caterpillar, not too bad. That's what we see on the daily chart. So from this a single time frame, we assess the risk the magnitude of the risk, and we say, okay, it's no bad place, it's a support level on this daily chart. The kind of inverted head and shoulder is forming here. This is what we call the assessment risk, to assess the magnitude of the risk. Are we taking a higher risk? Are we taking a low risk? Are we taking a smart risk? Are we taking a sophisticated, are we making a sophisticated trading decision? Okay, so this is about the magnitude of the risk. Is the market volatile? Is the market trending? Is the volatility high? Okay, you check the range, okay, the true range, and which financial instrument are we dealing with. Now, the second thing, assessing the risk, you want to also check, apart from the time frame, the season. Okay, the season, that's what we're talking about. It's like a farming. The season, proactive trader, the season. The proactive farmer will sow in the right season. Proactive trader will buy at the right time at the right place. What's the season? Talking about assessing the risk, we assess the market, because no financial instrument, ladies and gentlemen, no financial instrument is isolated somewhere. It's a global market. So we go back, we want to assess the magnitude of the risk. The tool that we'll use, the first one, okay, is the trading triangle. So we want to assess the magnitude of the risk. What is the market doing? Okay, market is going down. Or is it going up? Okay, it's going up. So if it's going up, we want to give priority to buy. Then we check also the cycle. If we catch the beginning of a bullish cycle, that's gorgeous. Now we compare it. We use our tool, the trading triangle, to compare with the market. We check the market leaders: Apple, Google, Caterpillar, ExxonMobil. Everything line up. This is about assessing the magnitude of the risk. Okay, according to our portfolio and the general macroeconomic condition, talking about the global market. Some trader will say we are 100% technical. There's nothing wrong with that. But it's also wise to know a bit about what's going on the other side, what other traders are doing, because you are not alone. Traders are making decisions that will affect you. Fundamental traders, momentum traders, liquidity traders, especially market specialists, market makers, okay, crazy traders, gamblers, speculators, they all come into the market. So you want to know what they're doing. So if you are purely Elliott wave trader, or purely double top traders, or purely Fibonacci pattern traders, Gartley traders, you will pay attention to other traders. So by doing that, you are assessing the risk so that you make excellent decisions. So you want to know the magnitude of the risk that you are taking. Okay, so this is what you see. So using the time frame, we allow you to see. So you see this picture and you make your decision according to what you see. But it's perfectly wrong, like I say 100 times, to make a decision on one single time frame. Let's move on to the weekly chart. This is a weekly chart. Okay, so somebody else who doesn't like to look on a daily chart or stop on a daily chart will come here and try to see what's going on this weekly chart. But like 80% of traders that use some of our tools will go on the daily chart and stop on the daily chart, or majority of traders, I see very often they stop on the daily chart and they make their decision, and it happened to be a completely wrong decision. Okay, now the reason why we will create the Smart Media Line is to encourage traders to look on the yearly chart. At least they have to know their critical price level, so they have to look on the yearly chart. Okay, which is very important. It's a powerful tool because it involves the yearly chart, not the 5 minutes, not the 50 minutes, not the hourly chart, not the daily chart, but the yearly chart. I think it's excellent tool, free. Okay, as I told you, you can go to Isan article from the 16th of November 2011 and check the article, trading critical price level. Okay, so this is it. So somebody now is coming here, okay, and he's looking on the weekly chart to assess the magnitude of the risk. This video is about the magnitude of the risk. How much risk is here? Or are we facing? Okay, so we're looking here. Okay, ladies and gentlemen, this is what we want to know. What's going on here? Going to the mind of other traders. Okay, what's going on here? It looks to me that the price is consolidating in this weekly chart, in this session here. Boom, 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 boom. Now we dip below that consolidation zone. Now we are coming back and retest it. We are just above it nicely here. It looks bullish, but aggressive traders, aggressive sellers may decide to push it down. Okay, that's not too bad. Let's draw another line on this chart, the trend line, and to assess the magnitude of the risk that we are taking. Now you see that we see things differently now. In fact, we are just touching this support level, also a resistance level from below. but we are above it. Okay, not too bad. So, but if you stop only on the daily chart, you won't see this thing now. You won't know what's going on here. You won't know. Okay. Now we want to draw a trend line. There's a trend line here. 2 points to draw a trend line. This one and this one here. Now we are here. Okay. So we say, okay, if it's pushing it up, if you buy here, it's working. You want to take profit here, not here. So if you didn't draw this line, you know the magnitude of the risk. This one you see on the weekly chart. You want to know how much risk. Let's move on to the monthly chart. This is now on the monthly chart. From the daily chart, we went to the weekly chart. Weekly chart, we are now on the monthly chart. Okay, so you see this picture again on the monthly chart. The price is above it now, right here, right now. Okay, is crashing down after going up. Okay, it pulled back. Now it rallied up again to this level. There was a downtrend on this monthly chart. 1, 2, 3, 4, 5. Price push it quickly up. Now we are here. So you are assessing the risk. The key point to remember about assessing risk is that you have to use valid tool. One of the tools to assess the magnitude of the risk is the trading triangle. The trading triangle and also multiple time frame trading using top-down trading system. The last thing that you need to check is the fundamental, the balance sheet. Talking about Google Finance, Yahoo Finance, free of charge, you can access the fundamental of the financial instrument that you are trading. The next thing that you need to check is the season, the time. The clock is the last indicator. The season, the price does not always go up, price does not always go down, the price does not always consolidate. You check also the market pattern. These are powerful, patterns that you need to check. You check in also the small median line, the critical path level number 1, number 2, number 3, number 4, number 5. You are assessing the risk, and then once you assess the risk, you are happy about it, and you are quite comfortable about it. You are responsible for your decision. Now you are waiting for a clear-cut signal at the hot spot trading zone. This video is about the magnitude of risk, and I hope you enjoy it and you will put it into practice in order to claim the market consistently. We are the TSTWSYS08 traders.